Today, we will review Google's second quarter earnings result from an owner's perspective. In its conference call, Sundar Pichai, CEO of Google, provided business highlights. First, he explains how Google is incorporating AI across its products and services, and I summarize them into 6 parts here. First, in search, Google saw the major evolution with the launch of the Search Generative Experience, or SGE. SGE uses the power of generative AI to make search even more natural and intuitive for consumers. For the other side of the search market, which is the advertisers, Google is testing and evolving placements and formats and giving advertisers tools to take advantage of generative AI. For example, with PMax, advertisers can use generative AI to optimize ads for both new and existing customers to maximize sales through generated headlines and descriptions that are highly relevant to customer queries. Second, with Bard, the large language model launched in March, Google is helping people to use AI in order to boost their creativity and productivity. Google recently expanded Bard's availability to over 40 languages and added Google Lens capabilities for image-based queries. Bard now has the ability to read responses aloud and adjust them for tone and style with a focus on coding tasks. The large language model is also utilized in advertising. For example, LLM was launched in Google Ads to simplify campaign construction for advertisers. This helps advertisers to create high-quality ads that work instantly and allow for easy adoption and scaling of successful creative concepts. In fact, nearly 80% of advertisers already use at least one AI-powered search ads product. Next, Android 14 will also incorporate generative AI to personalize Android phones, and the Pixel and Android teams are working together to enlarge AI roles in the latest devices. In retail, which has been Google's focus recently, New Product Studio uses generative AI to help retailers create tailored, eye-catching imagery for free. Google thinks this will be a game changer, especially for small and medium-sized merchants, who can now create high-quality images to use both across Google and their own sites without spending a lot of time or money. For example, shoppers can try on women's tops across a wide array of models from brands like H&M, Loft, using their technology. Rich visual, engaging content is a win-win for both consumers and merchants. In fact, product offers with more than one image sees a 76% average increase in impressions and a 32% increase in clicks. Thanks to this effort, Google has seen 2 times growth in the number of businesses using Merchant Center in the past 2 years, and they are now simplifying it by automating inventory management and giving consolidated view of performance insights. Fifth, Google Cloud is seeing customer interest in AI-optimized infrastructure, large language models, AI platform services, and new generative AI offerings like Duet AI for Google Workspace. Google Cloud offers a wide choice of AI supercomputing options, including Google TPUs and advanced NVIDIA GPUs. Although there were headwinds due to moderation in consumption growth as customers optimize their spending, Google continues to invest aggressively into cloud segment. And lastly, it lays out other AI use cases by customers. For example, AI is helping differentiate core products like cybersecurity and increase incident response engagement by 35%. Google's generative AI capabilities offer an opportunity to win customers and upsell to its base of 9 million paying Google Workspace customers. And Google's AI solution is helping Priceline in trip planning, Carrefour in marketing and campaigns, and HSBC in identifying financial crimes. Overall, new generative AI offerings are expanding the company's total addressable market, and they are seeing strong demand for over 80 AI models, with the number of customers growing significantly from April to June. In addition to such AI-focused remarks to investors, the management also stressed 2 business aspects in the call. First, Google continues their important work to operate more efficiently, creating durable savings to fund investments in their biggest priorities. For example, in January 2023, approximately 12,000 employees, 6% of total workforce, with a low performance scores were laid off to redefine strategies. As we can see in this graph, this doesn't mean Google's meaningfully shrinking its workforce, but rather just refocusing its efficiency. Second, Google expects elevated levels of investment in their technical infrastructure, especially through data centers and R&D. The primary goal is to support the opportunities in AI, including investments in GPUs and proprietary TPUs as well as data center capacity. Now, let's examine Google's financial performance in the second quarter. The consolidated revenue was $74.6 billion, up 9% in constant currency. This is not such a high growth for a company like Google, so let's break down the revenue in detail. First, Google advertising is broken down into three parts. Google search revenue increased by about $2 billion, less than 5%. Even though this is a slow growth in absolute terms, it was faster than what the market was expecting from the slowdown in the ads market. Second, YouTube advertising revenues of 7.7 were up 4%, reflecting stabilization in spending by advertisers despite economic uncertainty. In the ads market, YouTube delivers higher ROI than TV or other online videos on average. Two new ad offerings for streaming were announced at Brandcast, which were 30-second unskippable ads on YouTube Select and new pause experiences to deliver awareness or user actions. YouTube Shorts were also formidable with over 2 billion logged in users every month. Google introduced ads on YouTube Shorts at the end of 2022, and as it has been receiving good initial responses, brand advertisers began to test Shorts ads for awareness campaigns starting from May. For example, Laneige, a skincare brand, saw a 21% increase in unique user reach through Shorts ads and in-feed with improved efficiency in CPM. On the TV front, Google is reaching more than 150 million people on connected TV screens in the US and is seeing growth momentum internationally. Here are two examples how YouTube TV is strengthening its position. First, YouTube expanded its partnership with Warner Bros. Discovery across the Android ecosystem, including the launch of Max streaming service. Second, live sports are becoming a bigger part of YouTube TV. Sign-ups for NFL Sunday Ticket kicked off in April, and Google looks forward to hosting their first football season on YouTube this fall. The final, third advertising segment, the network advertising, generates $7.9 billion of revenue, which is down 5% year over year. Let's move on to Google Other, which is the fourth revenue segment. Its revenues were $8.1 billion in the second quarter, up 24% year over year. The main growth driver here was the YouTube's non-advertising revenues, primarily from subscription growth in the YouTube Music and Premium, which reached over 80 million. Other growth drivers were YouTube TV, followed by hardware revenues driven by the launch of the Pixel 7a in the second quarter. Fifth segment is Cloud. Google Cloud continued its fast growth with $8 billion of revenue, up 28%, which was faster than Microsoft's 15% cloud growth in the second quarter. Also, Google Cloud continued to generate operating profit for the second quarter in a row, at $395 million. Its operating margin was about 5%. Google Workspace, which is included in the Google Cloud segment, also had strong revenue growth, driven by increase in both number of seats and the average revenue per seat. Lastly, Other Bets revenue were $285 million, but generated operating loss of $830 million as it continues to invest in future long shots. Now, moving on to the cost side, TAC, which is an important COGS for Google, was $12.5 billion, up 3%. Total cost of revenue was $31.9 billion, up 6%, and growth of the cost was driven by content acquisition, primarily for YouTube subscription offerings, followed by hardware costs associated with Pixel family launches in the second quarter. The second quarter's R&D expense was $10.6 billion, a 7.6% growth year over year. As a result of all revenue and cost changes, Google's total operating income for the quarter was $21.8 billion, up 12%, and its operating margin was 29%, a bit higher than the average operating margin in recent years. Operating margins improved sequentially in the second quarter due to accelerated search advertising revenue growth, and the majority of charges related to workforce reduction and office space optimization were taken in the first quarter. Overall, it seems like Google's cost savings effort is starting to show more evidently in its operating margin. Google's capex remained at the same level as last year. However, CFO mentioned that the capex spending was lower this quarter due to delays in data center constructions, and it will pick up again right away as Google invests aggressively in its AI IT infrastructure. Now we will summarize the most helpful part of the investor Q&A session. For the business management focus in 2024, the CEO answered that durably re-engineering the cost basis is a major priority, while maintaining full investment in the AI. And in terms of AI search, the management said that Google is ahead of expectations in terms of progress with the product launch. Also, the initial feedback for the products has been very positive, and the company also improved efficiency significantly and decreased latency related to AI products. And the long-term vision is for the large language model to become the standard way search works. Regarding Bard in particular, people use it more for coding purposes, and Google Lens integration into Bard has been well received so far. Visual search is growing substantially, and it seems to have high potential going forward. To the question regarding cloud sector, management said that they are embracing open architecture, as well as supporting customers who prefer multi-cloud approaches. The company is experiencing a lot of customer interest in AI within the cloud sector, leading to more engaging conversations. AI presents opportunities for upselling and cross-selling to the existing install base, such as offering Duet AI in Google Workspace and Google Cloud. And these are the proofs that AI is expanding the total addressable market. Lastly, here are the two interesting news in the quarter that Google shareholders should be aware of. First, Meta, Microsoft, and Amazon are collaborating to launch an open source map service to fight against Google and Apple's dominance in maps. This alliance itself indicates the significance of digital maps across mobile apps, augmented reality, and self-driving cars in the future. Second, Google is now the second biggest smartphone brand in Japan. Although Apple is still a very dominant smartphone brand in Japan, with near 2/3 of the share, Google's smartphone shipments in Japan were also the highest in the world. In Japan, Pixel shipments increased nearly fivefold in first quarter 2023 to reach an all-time high share of 34% in the brand's overall global shipments and secure the top position. The recent launch of the Pixel 7a has seen a 74% increase in cumulative sales during the first 3 weeks compared to its predecessor. So although Pixel is not widely used in the US, it seems like the hardware have brighter future internationally. Okay, that's it for today's second quarter update on Google. In the following videos, we will continue to provide updates and fundamental analysis of important tech companies. So please hit the like button below and subscribe to the channel. Thanks guys.